Do you have a crypto investing strategy that prepares you for the upcoming meteoric rise in crypto in 2024? Well, if not, stay tuned and find out how to create one. My name is J. Scott McMillan. I make these videos to help crypto-curious people understand how they can bring crypto into their lives to catch up on their retirement, save for that dream vacation, and embrace the future of finance. As you know, the Fed has indicated it will be lowering interest rates next year, and that has fueled all the markets to reach new highs. But one market in particular is set to skyrocket, and that market is the crypto market. But you must have either packed your bags for the trip or get on it in a hurry because you're going to miss the ride. Today, I'm outlining my B.U.Y.S crypto investing system. It's going to have you poised to take advantage of this amazing crypto bull run. So what is the B.U.Y.S system and why do I think it will prepare you for this ride? Now, the B in the B.U.Y stands for buy the blue chips. Now, by that, of course, I mean Bitcoin and Ethereum. Any crypto portfolio needs to be anchored by these two big guys. They are the largest and the oldest cryptos in the game, and they're meant to be held long term. Now, that doesn't mean that you never sell them, but more on that in a minute. The U stands for undervalued altcoins. The trick here is to pad your portfolio with new crypto projects that you think will skyrocket in this crypto bull market. This could be tricky to nail down because these are very new projects with no track record, but you're taking a chance on them. Now, if you can identify a few of these small cap projects that you feel will have value in the future, then you only need one of them to hit the big profit from this strategy. Now, this is only a small portion of your portfolio, and maybe 5 or 6 of them is all you need. The trick is to buy them cheap and ride them up through the bull market, and then take your profits before the market turns over. Again, you only need one of these picks to hit a 50 or 100x to make a killing. Okay, the next letter in the B.U.Y system is Y, and it stands for yield farming. That's right, I believe any solid crypto portfolio needs to be taking advantage of decentralized finance, or DeFi. Yield farming is the simplest way to earn a high yield on your parked assets. We're talking about yields that you just can't get in traditional finance. At a minimum, we're talking about 10 to 20% yield, and as high as 500 to 1,000% yields. The key is to diversify into yield farms of varying risk levels and to watch them so you know if one of the yield farms drops, then you can move your assets into a higher performing farm. Typically, during a bear market, you put most of your yield farming assets in stablecoin pairs that are much safer, but yield around 10 to 20%. When the bull market comes raging in, you can then go risk on and find those juicy 500% yields. Now, the last letter in the B.U.Y system is strategy. You must have a strategy in place to make this all work. Now, by that, I mean you need to know when to layer in and layer out of your assets. This is the key to any successful crypto portfolio. It's pretty simple, really. You basically buy when the market is low and you sell when it's high. That's it. Pretty simple, right? Well, it can be, but you have to plan ahead and already be in your selected assets when the market starts going up. You see, crypto investors do just the opposite. They wait and they buy when the market is going up or is already up. They see everyone else jumping in and they feel that they're missing out, so they just FOMO in. Just about the time they finally get in, the market dynamics have changed and it starts to go down. This chart shows investor sentiment as the market goes through a typical cycle. You can see that it all starts with hope and optimism, but ends with panic and anger. You want to be packing your crypto bags in the hope and optimism phase and be layering out of your investments during the thrill and euphoria times. Ideally, you would mostly be out of the market at the anxiety stage. You would be in stablecoins or fiat. Now, I will leave some of my blue chips in for the long run, but I'll be out of all my undervalued altcoins and a lot of my blue chips, ready and poised to start layering in again at the bottom. The key thing is to know about the crypto market and that it always cycles. And if you want to secure your financial future sooner rather than later, you need to be out of the market when it cycles down, but get back in when it's down and prices are cheap so you can ride the next cycle. The other thing to note here is that this has been how crypto has worked for the last 10 to 12 years. But it is maturing and the cycles will probably slow down and it will get less volatile as crypto grows up. But for now, it's all about cycles, baby. If you would like to know more about my B.U.Y.S system and what exact crypto assets I'm investing in, then drop me an email at scott@jscottmcmillan.com or on X at Crypto Cowboy Montana. That's Crypto Cowboy MT. Thanks for tuning in, and don't forget to hit that subscribe button if you'd like more videos like this one.